Hello everyone. Welcome to Sam's Summaries. This episode is a deep dive into Sam Fury's summary of swing trading using the 4-Hour Chart, Book 2, by Heiken Ashi Trader. It has been created with the help of AI. It is titled Trade the Fake. You can read the original post at samfury.com.
Ever get that sinking feeling in trading? You know, like when you jump into a trade and suddenly the market just turns against you?
Oh, tell me about it.
Today, we're diving deep into those moments, those fake outs, and how you can, well, not just avoid them, but maybe even like profit from them.
I like where this is going.
We're unpacking swing trading using the 4-Hour Chart, Book 2, Trade the Fake by Heiken Ashi Trader. And it's like packed with strategies for swing traders.
I've heard good things about this one.
Yeah, it's all about becoming more savvy, you know, especially with those frustrating fake outs that just, they can cost you.
Yeah, they really can shake you up.
Right. So this deep dive is all about spotting those traps.
And maybe turning the tables on them, right?
Exactly. So the book, it kind of starts off by highlighting something, well, a lot of traders are noticing these days, you know. It seems like fake outs are more common than ever.
Yeah, it's something I've definitely been seeing more of, too.
Okay, so it's not just me. Everyone's feeling this, but why?
Right. Is the market getting trickier?
Yeah, like what's going on?
Well, you know, the book doesn't really pinpoint a single reason, but it really makes you think. Could it be algorithmic trading? Or maybe just inexperienced traders jumping in, contributing to all this?
So it's like the market's gotten more crowded, more prone to these sudden shifts.
Possibly.
But how do we avoid getting caught in all?
Well, the book, it introduces a really interesting way to look at fake outs. Think of them like a boxer's feint. It's that deceptive move, you know, designed to throw their opponent off balance.
So in trading, that means the real move often comes after that initial fake out.
Precisely.
So instead of getting all frustrated by those fake outs, we should almost expect them.
You're starting to get it.
Yeah.
And that's really where the book's strategies come in. It's about shifting your mindset. You know?
Okay, I'm listening.
It's not about reacting to fake outs, but about anticipating them.
That's a pretty big mindset shift, though.
It is. But it can be incredibly powerful.
So how do we start to actually anticipate these fake outs? Are there any signs, any particular situations where they're more likely to happen?
Absolutely. The book points out that, well, consolidation periods, they're like breeding grounds for fake outs.
Consolidation periods. Okay. Now, for anyone listening who's newer to swing trading, can you just give us a quick,
Sure. Consolidation is basically when an asset's price is moving sideways. It's kind of stuck between a price floor, the support level, and that price ceiling, the resistance.
Okay, so it's like that stuck in a rut phase when it feels like the market can't quite decide what to do.
Exactly. And that indecision, combined with, well, usually lower trading volume during those times, it creates the perfect setup for a fake out.
I see.
Traders get impatient, they jump in hoping for a breakout, and bam, suddenly the price reverses.
So that's why this book is called Trade the Fake. But how do we actually do that? Turn that, potential loss into a win?
Well, the book, it dives into a tactic called the 5-candle rule, which plays out on the 4-hour chart. And this is where things get pretty interesting and fast-paced.
So let's say you're watching a stock in a consolidation zone.
Right.
It breaks above resistance, looks like a breakout. Most traders would jump in right here.
Yeah, a lot of people would.
But we don't. Not yet.
Exactly. The key is to resist that urge to chase momentum.
So what are we waiting for?
Confirmation. Or, well, lack thereof, actually. If that breakout is real, we'll let it run. But if the price reverses back into that consolidation zone within 5 4-hour candlesticks, that's our fake out signal.
And that's when we make our move. But if it's a fake out, doesn't that mean the price is moving back down?
Exactly. And this is where it gets a little bit counterintuitive. You actually enter a trade in the opposite direction of that initial breakout.
Wait, what?
So in this case, even though it looked like a breakout to the upside, you would actually go short.
So we're betting that the price is going to fall back down.
Exactly, back down to that support level.
So we're profiting from those traders who got fooled by that fake breakout.
You got it.
That's almost a contrarian approach. You're going against the initial hype.
It is. And often, those traders who bought into that initial breakout, they're now panicking.
Makes sense.
They're selling their positions, which pushes the price down even further, and that actually works in your favor.
Okay, so we wait for that fake out signal, enter a short position, and ride that wave down. But where do we set our profit targets and stop losses, to manage risk?
Right. So your profit target would be the other side of that consolidation range.
Okay.
It's this example, that original support level, your stop loss,
Yeah.
just above the high of that fake out candle.
Okay. But isn't this strategy still pretty risky? What if that breakout was real and we miss out on a big move?
That's where the risk-reward ratio comes in. The book, it really emphasizes this.
Okay.
You only take these fake-out trades if they offer at least like a 1.2 risk-reward ratio.
Yeah.
That means your potential profit is at least double your potential loss.
So we're being selective.
Exactly.
Yeah.
We're only taking those setups where the potential reward outweighs that risk. That's a key takeaway for sure.
It is. And that's what, kind of separates those successful traders from those who constantly get like whipsawed by the market chasing every move.
You said it.
Now, you mentioned that this strategy works particularly well with certain chart patterns. Can you walk us through some examples?
Of course. Some classic patterns are practically magnets for fakeouts.
Oh, this is good.
Flags, triangles, and channels. Let's start with flags.
Okay, I'm ready to learn how to spot those fake flag waves.
All right, let's do it. So imagine a stock making a strong move upwards.
Right.
That's your flagpole.
Okay, the flagpole. Got it.
And then takes a pause, consolidates for a bit, forming a downward sloping flag shape.
I've seen this, yeah.
Now, a lot of traders, what they do is they see the price break above the upper line of that flag and think, all right, this is it, time to buy. But you know what happens more often than not?
What happens?
Fake out.
Ugh, fake out.
So it breaks above that upper line, making everyone think, oh, it's about to take off.
But then it dips back down, it breaks below that lower line of the flag, you see.
So tricky.
And it shakes out all those traders who bought in a little too early. It triggers their stop loss orders.
It's like the market's weeding out the impatient players.
Exactly. And once those traders are out of the picture, the price, it's often poised for a much stronger move upwards. So if we understand this pattern, we anticipate that fake out, we could actually buy when the price dips below the lower line of the flag.
That's the idea.
Wow.
Yeah, it's a little counterintuitive.
It is, yeah.
But that's where the opportunity lies. You're essentially getting before the real move happened, capitalizing on the fear of those who got shaken out.
Okay, so flags. Got it. What about triangles? Those always seem a bit more complex to me. How do fake outs tend to play out in those patterns?
Triangles, they're interesting because they build up so much anticipation.
Right.
As those trend lines converge, they're getting tighter and tighter, you see. Traders, they're getting ready to pounce.
They're like waiting for that big breakout.
Exactly.
Like that moment of silence right before a firework explodes.
That's a great analogy.
Thanks.
But like we were talking about, the market, it loves to play games.
Oh, yeah, it does.
What often happens is the price, it'll break out of the triangle in one direction, right?
Okay.
Seems to confirm, like everyone's suspicions. But then it reverses, and it makes the real move in the opposite direction.
Oh, man. So those traders who chase that initial breakout, they end up getting caught on the wrong side.
Happens all the time.
Right.
And that's why patience and confirmation, they're key with triangles. You let price break out, and then, well, you just watch how it behaves.
Yeah.
Does it continue with strength, or does it quickly reverse back into that triangle?
If it reverses, that's our signal.
Exactly. Fake out in action.
And we're ready to trade it.
Now let's move on to channels. A fake out below the support line of an upward channel, that can actually be a fantastic buying opportunity.
Right, because it seems like a breakdown, but it's really just another shakeout.
Exactly. So remember how we talked about consolidation zones? They're those breeding grounds for fake outs.
Uh-huh.
Well, channels they're basically extended consolidation zones.
Okay.
That breakdown below support, it scares a lot of traders, creates selling pressure that drives the price down further.
So again, it's about understanding that fake out, seeing it as a chance to buy at an even better price.
Right.
Rather than just like panicking and selling.
Exactly. And just like with the other patterns, you manage your risk by setting a stop loss just below the low of that fake out candle. That limits your potential losses if that breakdown turns out to be real.
It seems like the key takeaway here is that by understanding these fake out patterns, we can transform our trading approach.
For sure.
You're no longer reacting emotionally, chasing breakouts, getting caught in those traps.
You've got it. Instead, we're patiently waiting for confirmation, managing our risk, and, well, using those fake outs to our advantage.
We're learning to read the market's mind, anticipate its next move, and profit from its deception.
And the more you study these patterns, the better you'll become at spotting those high probability setups where the fake out is almost guaranteed.
I like the sound of that. This whole concept of trading the fake, it's really a game changer. I'm already starting to see the market in a completely new light.
That's great to hear. It's all about shifting that perspective.
You know, it's amazing how much we can learn from a single book.
Right. This whole deep dive has been a real eye-opener for me.
Me too, totally. It's not just about those specific tactics, though, is it?
No, not at all.
It's about that underlying mindset shift.
You got it.
Yeah, we're moving from fear and reaction to anticipation and strategy.
Exactly.
And that shift, that understanding of market psychology, that's what can really set a trader apart, I think.
Oh, for sure. For sure.
You're right. It's like we're learning to decode the language of the market, see those subtle cues that most traders miss.
Yeah, you start to see things differently after a while.
You do. So by mastering that art of trading the fake, you're essentially flipping the script.
Yeah, I like that. Flip of the script.
You're no longer falling prey to those traps. You're using them to your advantage.
You're in control.
Yeah, you're the one setting the traps now.
Exactly.
It's almost like turning the market's deceptions against itself. Well, thank you so much for sharing your insights and guiding us through this fascinating exploration. Until next time, happy trading.
And happy living.
We'll see you all soon.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.